This is the Third Coin Podcast, insight into the past, present, and future of blockchain, crypto, NFTs, and Web3 technology. This program is hosted by Grant Cermak, Dan Mueller, and myself, Louis May. You might say this is a series of discussions, interviews, questions, answers, opinions, and maybe some conversation about what is the third coin. Hey everyone, welcome to today's recording of the Third Coin Podcast. Once again, I'm here with Dan Mueller and Grant Cermak, and today we're going to talk about some very interesting aspects of cryptocurrency blockchain world, which is DeFi and Terra. So, I mean, I think I've heard of both of these things, Grant, but once again, I'm still just a normal human that has to read stuff and kind of understand it. So what are we talking about, Grant? What is DeFi?
DeFi, Decentralized Finance. It's like we're taking crypto, which has normally been used as speculative assets, right? We're doing dog coin trading or whatever other kind of weirdo asset stuff that's happening. And we've taken it to the next level. And the next level is beyond this sort of just making weird tokens and saying, okay, these tokens can have some meaning. So to have decentralized finance, we need to have crypto bound to stuff that's traded in the real world. And so this can be a stable coin. So it can be something like that, or it can be other cryptocurrencies. So you can have something like, let's say, Ethereum or Bitcoin. And you might want to interact with those in a consolidated way on a single chain where you can, say, speculate on the price of Bitcoin, or you can borrow against your Bitcoin, right? What would it mean to borrow against your Bitcoin? So this is a well-known thing in the world of traditional how finance works, right? This is not something the normal mortal uses. You don't buy something and borrow against it, except one thing. A lot of people buy something and borrow against it, and that's their home. So they'll buy a home and they'll have some amount of equity, and then they'll borrow against it as a home equity loan. So you have an asset and you're borrowing against it. You can do this with a lot of different assets. You can do this with stocks. So it is possible to sort of take stocks that you own, borrow against them. So you now have a loan against it, take that cash and go do something with it. You could start a business. Or you could do something really stupid, which would be borrow against your stock and maybe buy more of that same stock.
So there's margin trading, right?
It's not exactly margin trading. It's something else, but it's degeneratively stupid, and it's called leverage and risk. And you might.
But when you open a typical stock or equity account, if you put enough money in there, or sometimes even if you don't, the Charles Schwab will say, hey, you've got $1,000. Well, guess what? We'll give you $1,000 to play with too.
Yeah, and everything is just, daisies and roses until you get that margin call. And then you're like, oh shit. Now what?
Has Marge called
now you get wiped out. Yeah,
and so,
actually, Marge did call once, but it was a clerical error.
Was it fun to get that call? I don't think.
No, you don't want Marge you never want Marge to call you.
So this is joking. We're saying Marge because this is a way to speak about getting a margin call. It's like when your broker calls you up. Margin's a little different. So margin is when somebody just lets you borrow some money to do trading with. Right. So oftentimes that's not even collateralized. You don't have to put up collateral. You open your Charles Schwab account and they'll say, hey, we're just willing to borrow you $10,000. You should totally go speculate in the market on it because, nothing bad will happen with that at all. Couldn't.
No, that never happens.
Well, it sounds like something you'd never do if you're sane, right? But then you realize if I'm going to put in 3,000 because I want to buy some stock today, unless you have a margin account, you can't trade that $3,000 today until the funds clear, which is like in 5 days or something. So you're like, well, of course I'm going to do the margin. So I know my money's good. So I want to be able to trade today. So you sign up for the margin, then,
Yeah. I mean, there's all kinds of stuff. When I opened my Charles Schwab account, I got a level 2 options trading account. And
that sounds like a good plan.
Well, I knew how to get that. I didn't, however, get the level 3 option. I could have got it, but I was like, no, I don't want to even get that. And that's where they let you do things like the main rule and option is, I think it's called never sell a naked put. Yes. There's certain rules that can really get you into a major margin call.
Okay, let's not talk too much about stocks.
Yep.
We could talk about this all day and laugh and smile about how much money we've all lost or gained by doing some foolishness. But the whole idea, distributed finance or decentralized finance, is that you can bring some of these ideas into the world of crypto and you can start doing this, right? So lending, borrowing, this is stuff that is the world of traditional finance. And if you can do it with smart contracts and you can do it in crypto, then it becomes DeFi. So the first thing that people wanted to do was to create stable coins. Stable coins were this representation of standard currencies on chain. So that's step one, because if you don't have a stable coin, you sort of don't have a way to really do a lot of the fun stuff you want to do in DeFi. So you need a stable coin, and a stable coin is just where you have a coin and its price doesn't move a whole lot. Now, the mechanism for actually getting to the price doesn't move a whole lot is very, very tricky. And we've alluded to that. I don't want to retread that ground, but just think about this. A stable coin, it doesn't go up. It's not going to moonshot, and it's also not going to go down 90% in value, right?
So you don't buy a stable coin to speculate in the market and make money.
You buy a stable coin because you're trying to get out of a trade.
Okay. So you buy
like we
a
talked
stable
about Tether, the fraud that is Tether, it's technically a stable coin. It's the most common one. And you get into the stable coin because you think that you want to, capture your profits. You want to take your profits. Where do you take them to, right? You take them into a stable coin. You're expecting a dip. The dip happens. You trade back out of your stable coin back into that coin or some other coin when you think.
So trade out of your Dogecoin right now and put it in a stable coin so that you stop losing money on it.
And this is not financial advice, but that's kind of how it works.
It could be whatever. Dogecoin just went up a lot, and you were holding Doge,
did it?
And now you say, "Hey, I think Doge is going to go down." You could sell the USD, and then you might have some tax implications or whatever. So then people said, "Well, I'll swap to a stable coin representation," and so then I'm not saying that that's right. That's actually not right. Anyway, so this is the thought. So you swap into something that's stable, and so now Doge crashes, and then you go, oh, now Doge is back low again. I'll swap back in, and then Doge spikes again. So now you make a bunch of money, and you harvest your profits into the stable coins. Kind of what's going on now. Okay, now we can talk about DeFi because stable coins are very important. Otherwise, a lot of this stuff just doesn't straight up work. Let's say that you have an asset like Bitcoin, and you don't want to sell it ever. Why would you ever sell? Never sell. You have an asset. It's going to keep going up in price forever. So why would you ever sell it? This is a bit
to get into chia. I did it wrong. I should not have sold my Bitcoin. But this is what I should have done. Yes.
This is the thinking of the Bitcoin maxis. Okay, so some people will say, you sell your Bitcoin, who cares? Other people will say you got to hold your Bitcoin on for dear life, never sell it anywhere ever. Okay, so if you never sell an asset, does it do you any good? Well, I can't eat my Bitcoin. I can't, buy a car with my Bitcoin if I never sell it. So what good would it do me? You can borrow against it. What would you borrow? You would borrow a stable coin. Okay, so what you can do is you can put your Bitcoin up as collateral, just like you put your house equity up as collateral. And then someone says, gosh, okay, I'll take that collateral as, something you've given me against the loan. And so then there's a collateral ratio. So that says, how much Bitcoin do you have to put up for me to give you some of that stable coin so that you can have it to do something fun with? Typically, it's 50%. So what that means is if I give you 2 Bitcoin, I will borrow you enough, an amount of stable coin that's half of whatever you put up as collateral.
Okay.
So now you can go use that stable coin. You can bring it to a centralized exchange or something. You can cash that out. You're not making any money. You haven't made
because it's
money.
A loan. You don't have tax implications.
Again, I'm going to stay away from the tax implications.
Okay.
Exactly what that means. But
we're not fiduciaries, not tax accountants.
In theory,
I will say that this is the smart thing though, because when I sold my Bitcoin to buy chia and buy chia farming stuff, my friend got a loan against his Bitcoin, still has the Bitcoin, and used that money to buy chia. And then he put some other Bitcoin in a fund where he got paid interest to pay off the loan. So he got free chia as far as I can tell.
Okay. but is my understanding correct that this is similar to, say, taking out a loan on your life insurance policy like the wealthy do. Things like
kind
that.
of. Let's just stay with the home equity thing. It's super easy to understand. You have an asset, you're staking that asset, you're putting that asset at risk, right? If you don't pay back that loan, you default on that loan, they take your house.
Sure.
That's what's at risk here. You don't pay back that loan on the Bitcoin, they're going to take your Bitcoin. That's how it works. So it's not like you get to game the system. It's like, that's what collateral means. You're putting this up and you're getting something against it. You have to make those loan payments. You have to, they're going to charge you a certain interest rate and you have to make payments every month or whatever the terms of the loan are. So none of that changes, but it's in the world of crypto. So you cannot do this.
Do they only take the amount of Bitcoin that it's valued, or do you actually maybe even lose all of what you staked? I guess that would be in the contract terms.
They'll sell your Bitcoin to pay off the loan.
Okay.
It's called getting liquidated.
Okay.
And there's a couple ways you can get liquidated. If the value of the loan exceeds the collateral of whatever you put up, then you either have to re-collateralize your own loan by putting more money in, more Bitcoin, staking more Bitcoin, or you got to pay off the loan, one of the two. If you don't do one of those two, they'll sell your asset, they'll give you the difference, and that'll be it. You'll get liquidated. That's what getting liquidated means. Like, okay, you got your hand put in a blender and then they turn the blender on and your hand got liquidated. That's what it means.
AKA wrecked.
Great.
Yep.
It's not good. You definitely don't want to get liquidated.
No.
So
you're being forced to sell your collateral
asset. Yes. And now you're homeless.
Yeah. And crypto is, not the most stable asset. So people get wrecked frequently on big swings. Either way, people bet against the price of crypto or they go long on the price of crypto. Big swing happens, a lot of people get wrecked.
Okay, so now that we kind of have a general understanding of what DeFi is, let's just say it's lending, and one might ask, where are they going to get those proceeds?
Yeah, how can I borrow some money?
No.
Okay.
You got to have something to borrow. Like I put it up, but where are they going to get the stable coin to give to you, the one who wants to borrow the money? You want to borrow the money, but like they got to have something to lend. It just can't come from nowhere. Well, that's where you have to incentivize depositors. Now we're just into the world of traditional banking. This is how banks work, right? They somehow incentivize you to come put your money in the bank. And then what do? They turn around and they lend it out fractionally, sometimes, many times, the same dollar, many times.
So wait a second. You're raising a question. Now we know that banks have a certain ratio that they are by law allowed to fabricate this money out of thin air, which is where where money is actually printed. I have $1 million in my bank. I get to loan out X amount. Are these same laws are not applicable to DeFi?
DeFi can do whatever it wants
right now,
all the time.
I guess
stopping them.
Okay. All right. Please continue.
You got to get depositors, maybe, or maybe you're just telling people that you're getting depositors and you're just minting tokens, handing them out, telling everybody that they're worth one and they aren't really worth one.
Because you're not a bank that's linked.
We're not talking about anything. We're just talking about let the buyer beware here. You never know what's happening. So what is supposed to happen is there's supposed to be something happening. So there are things called assetized stable coins, right? So you have something where there's supposed to be $1 on deposit in this bank account somewhere. And every dollar that's on deposit is 1-to-1 with the stable coin.
And we've talked about that before.
That's how it gets minted. Other ones are called algorithmic stable coins. Okay. An algorithmic stable coin is where you don't have something like that. You take deposits of other types of assets. Maybe you take Ethereum or you take Bitcoin or whatever. So you deposit a bunch of stuff. And because those are being held in a trust, that deposit in itself allows you to mint a coin. And that coin is tied to the value of what has been deposited and locked into this contract. And so those algorithmic stable coins, they have to do some tricks. If a lot of people are minting that stuff, then they're causing a lot more of it to exist, and that can cause the price to go down. So it can do what's called losing its peg. So again, this is kind of tricky stuff, but I think just generally, so we can say, hey, you've got to get somebody to lend before you can borrow, right? Because there's got to be two sides to every trade. You want something, it's got to come from somewhere. And in the world of crypto, these things are they're hard, like they're hard to fraudulate in some sense in a lot of the ways that cryptos are created, because you have these consensus algorithms and this mining or this farming or whatever. But some of these things are tokens. And when it's tokens don't have the same sort of controls that, you know, you have to create it by doing something. You just create it out of thin air. And in that sense, you have to look much more deeply at how these things are being created to really understand, is it pegged to something? Does it have a real value? What is the real value? Or is it just a perceived value?
I think that kind of just, this is a little off topic, but I want to make sure my understanding is right. This is one of the big differences between tokens on the Ethereum chain and tokens on the Chia blockchain, right? Because tokens on the Ethereum chain you just make tokens, whereas with Chia, you actually have to input a little bit of Chia.
It's such a small amount of Chia that it might as well be zero.
Okay.
I mean, you can create 1 billion tokens on Chia with $80. Okay. That ratio is like, I know it's not zero, but it's so damn close to zero, might as well be zero. Someday that might change and that wouldn't be the case anymore. And then you really do have a floor about what a token is worth. Right now it's 1,000 mojos, and 1,000 mojos might as well be zero. It's
okay.
So small. It's 1 billionth of a Chia or something ridiculous.
Okay, so we've got this stuff. How do we we own some assets? How do we collateralize that and borrow something else?
Okay, so DeFi is happening on a lot of different chains. Okay, it's happening on Ethereum. Another place that it's happening, one place that our listeners might be very interested in, is a chain called Terra. Why is Terra interesting? Not because of its consensus mechanism, certainly not because of that. They're doing the same ridiculous nonsense that many other chains are doing. Very centralized, very few nodes are creating blocks. So Terra is not interesting because it's a good chain. It's interesting because they have this huge ecosystem. So let's now jump into Terra a little bit and just kind of look around and poke around and see what's going on here, because it's DeFi Mecca. Let's open the web browser and let's take a look at the main Terra website. It's also a place where we can kind of interface with a wallet. So we'll just kind of start there. So this is Terra.money. So Terra.money is kind of your portal to all things Terra. If you start there, you can see all kind of interesting stuff on their front page. It's all very marketing and interesting stuff, but this is kind of where you go when you want to start actually working with Terra, the blockchain, and interesting stuff that you can do. So Terra Station is it's a website. So it's Web 2 stuff, but it allows you to interface to some Web 3 stuff. So what is Web 2, Web 3? So Web 2, look, we're at a website. That's Web 2, right? Web 3 is we input some amount of crypto stuff on the back end. So you can see on the upper right-hand corner, we've got that connect button. So I think we've already clicked that on the next tab.
Yeah,
so
when you click that, you pop open right here, which is...
So now we're looking at this and we're saying, all right, we want to connect a wallet, right? And the wallet is showing us some stuff. Actually, I think what happened was we clicked the wallet in the upper left-hand corner right there. Yep. So now we're looking at the wallet. You have no funds. It's showing you nothing because you haven't connected a wallet yet. So if you click that connect button, then that thing comes up. And so now we're seeing, hey, here's where we can connect a wallet. Why are we talking about this? Because this is just like MetaMask. Okay. For everybody who's experienced with Ethereum, you need a wallet. A wallet is where you hold your coins. You don't hold the coins in the website. The website is just scraping some information out of your wallet so that it can say, hey, you have this much Luna or this much UST or whatever you've got, right? So you can see that we would need to get connected to a wallet, and that would be a Chrome extension. So that's the next piece. So let's pop.
So then I clicked right here and that took me to this.
Yeah. So this is the Terra Station wallet. So two separate things. We have Terra Station, which is a website. Now we have the Terra Station wallet. This is a Chrome extension, just like MetaMask. So if you click add to Chrome, do that. Okay, new wallet. Just the third coin is.
Okay. Guess
okay, now you got
passwords.
Yeah, give it a password and confirm. Now, I don't know if anybody watching this has noticed, but we've done something bad. Dan, fill us in. What have we done?
Do we show our secret mnemonic phrase again?
We have our mnemonic phrase right on the screen. Oh my
I
gosh.
didn't even notice.
Should we ever do this?
Well,
no, we should not. We should never do this. We're going to keep repeating this for our listeners at home.
If we want to get robbed, this would be a really good way to do it.
This is the exact way you would get robbed. His mnemonic is on the screen, and this is how everyone will steal the money from the third coin.
Mean do a live YouTube show and show people your mnemonic, and they will take your money.
They will, absolutely.
But they'll wait until you put it in, and then they'll yank it.
Exactly.
Yoink. Sorry. Yeah.
Yoink. Yeah. Okay. So go ahead and click that. I have written down the mnemonic.
Let me actually copy and paste it over to another place where we can post it live.
Sure. Wow. Yeah. Okay. Love it. This amuses me. Okay, so you click the I have written down this mnemonic, and then we'll be able to do the next bit. So it's actually asking you to confirm this. So what is the 22nd word and the fourth word? So now you definitely had to have written that down.
Well, yeah. Okay, good thing. See, I'm once in my life, I'm
so it's giving. So what's happening here? It's giving you a little test. It's saying, hey, did you really write it down? Because they really want you to do it. So if you haven't, then this would
you can click the walk of shame link at the bottom. I haven't actually written down the mnemonic. I lied to the website, and it'll show you what they are again. But
it'll take you back through it.
You got to click the 22nd.
Okay, there's 24, so I could have counted backwards, but I didn't know that.
Submit, and we should be good to go. Okay, great. Grab that address. Okay, so now hit connect, and then we'll be ready to go. Okay, cool. So now we're connected. We have a wallet. Stay on that tab. The setting in the upper right. There it is. Testnet.
Okay, go to that right there. What are we doing here?
Well, unless you want to do real money and lose some real money, we're switching to test nets.
Oh, okay.
Right. So now you can copy that address. See that little address there? There's a little copy button. Yeah, click that guy and then go to the faucet. Let's get some coin.
Oh, so the faucet doesn't give us real coins, just coins?
No, because look, we're on the testnet faucet. So
okay, got it.
Paste in your testnet address there. Send me token. Okay, cool. So now we're going to get 10 Luna. So we'll come back to that in a minute. All right. So none of this is particularly interesting. We did this on Chia. This is the same on Terra. We managed to successfully get ourselves some testnet Luna. And so now we'll be able to try some stuff. So on Terra, there are a bunch of different DeFi products that come by default. You don't have to go search for them. You don't have to find them. They're right there on the Terra Station site. So if we go back to that site, we can take a quick look and see a few of the things that we are able to do. So if we go to the first tab on the left-hand side, there's a bunch of apps over here. So one of them is Swap.
So to me, it sounds like, Grant, you're saying there's a bunch of like products already set up for you to swap into.
There's a bunch of protocols. So Terra has a lot of these different DeFi apps that are built in. And so you can do some stuff. So right now, we've got this UST thing selected. So it's saying I could swap UST to something else. We're not going to have any UST. We are going to have some Luna. So if you click that drop down, show all there, click Luna. Okay. Now select a coin on the bottom one. Pick UST. So this is how we could swap. So this is a built-in function into the Terra ecosystem. It's using a thing called Terra Swap. So this is similar to different kinds of swap protocols that exist on other chains. So nothing groundbreakingly new here, but you do have the ability to swap between different types of tokens on Terra. And so once we have our Luna, we'll be able to do this. And you can see that there's 3 different ways that we can do a swap. You can do what's called market, Terra Swap, or Astroport. So those are all different ways to swap. They're different protocols. The thing that's very, very interesting about Terra. So let's click that second tab.
Oh, the second tab, this one. Boom, wallet.
One of the things that's built into Terra is what's called Anchor. So this is tying back to what we had originally talked about, which was how do you actually get the money that somebody could lend out? You got to get somebody to deposit it. Okay. So Anchor Earn is a money market account on Terra. And look at that number. What is that, Lewis?
It's almost 20%. That's like
20%. No, we're not talking about like 0.0000002% that you get at the bank.
No, that's my savings account.
We're talking a full 20%.
Yeah, it's over 1.5% a month on money.
Yeah, that's kind of neat, huh? Like where can you get a yield on a stable coin? We're talking about
How is this not a scam?
deposit. That's a good question. How could they possibly pay that yield? Like, in what universe? Like, if this is possible, this is game-changing news. Like, I want that rate.
But in theory, this is a yield that they're paying to people who will stake their coin with them so that they can take that and loan it out to other people who want to partake in DeFi.
Yeah, let's take a look
and
at
for that to work, for you to get paid 20%, somebody else has to be borrowing money and paying a lot more than 20%.
Unless
Otherwise,
you're in the U.S. banking system, of course. So if you're a bank, you're legally obligated along with the Federal Reserve. And the Federal Reserve, when everybody says, hey, we're printing money, it's actually the bank's printing money when somebody agrees to a loan.
Okay, so let's not get too sidetracked, but
let's stay on one scam at a time. One scam at a time.
Okay.
Let's go to the Anchor tab and let's look at a little bit about what Anchor says about itself. So this is the Anchor app. So app.anchorprotocol.com.
So what is Anchor another coin?
No, that's the same thing. We're looking at Anchor. I'm just showing you more detail about it, right? Like you can go to Terra Station, you just put your money in there. But this is like the number of people who have been depositing and doing stuff, right? So you can see, if you scroll down a little bit, here's the total depositors, right? So how much have people deposited? $9 million.
$9 billion?
Oh, yeah, billion. Okay, sure. And look at, there's our total borrowers.
Okay.
An imbalance, and an imbalance to the people who want the 20% tendies, and an imbalance to the people who want to borrow the money. Not sure about what that means, but it might mean that there's not actually a balance of borrowers and depositors. Lots of people want that 20%, and maybe not as many people are borrowing. I'm not a financial expert.
Me either, but that doesn't look right.
Okay, so you might ask yourself, how is this possible, right? Let's go to the last tab on the browser here. So here's kind of a neat video that this guy put together. This is, how is this 20% yield possible?
Should we go?
Yeah,
yes,
play a
maybe you'll get it. I watched this once through already, but let's do it again.
Sure, play a bit of it.
Borrowers on the Anchor protocol must deposit staked Luna or staked ETH to borrow UST. On Anchor protocol, staked Luna is referred to as bonded Luna or B Luna, and staked ETH is referred to as bonded ETH or B ETH. B Luna is created by depositing regular Luna into a special smart contract on the Anchor protocol that delegates the deposited Luna to whitelisted, i.e. verified, validators on Terra. This Luna is locked for 21 days as per the standard staking lockup. Meanwhile, BETH is created with the help of another crypto project called Lido Finance, which makes it possible to tokenize staked ETH so that it's tradable on the Ethereum blockchain. For context, any ETH staked on the Beacon chain is currently locked.
Same thing we talked about, right? If you want to borrow, you got to stake. They're talking about what are they actually doing to sort of make this Anchor protocol work. So the people who want to borrow UST on Anchor, they got to deposit. You got to put some Luna up. They got to put some ETH.
If you want the magic beans, you got to put your cow up.
Yep, and they're putting it up at the tune of like that 100%. So if you want $20,000 loan, then you got to put up $40,000 worth of these assets.
So they're doing two things there. Some people are just staking their money with Anchor and taking the 20% that they get paid to do that. And other people are staking their money with the purpose of actually being able to borrow twice or half as much as they staked.
Yep.
So, well, that's why everybody's taking the 20%, because the difference is only 30%.
It's not because of the difference.
Okay.
It's because it's a difference in priorities and alignments of what you want.
Yeah.
Dan has excess cash and he wants that cash to sort of do something for him. He wants to earn yield. He has nothing better to do with his money. He's not starting a business. He's not doing anything productive with it. It's just sitting there, not growing. And that's not good. He wants to earn a yield. So he's
and
like,
that's paid at a daily or monthly or annual interest rate.
Sort of irrelevant how fast it gets paid out. Anchor pays out at some cadence. You actually have to go collect your interest on Anchor. So it's like it pays out, but then you have to go grab it. And then once you grab it, then you can do something with it, but you do have to manually do that. There are other people who will sort of manually go harvest your interest for you. They'll go swoop it. So there are all kinds of like tricks on this.
But it's the difference being if you are staking your money to borrow money, you get all of that half of your equity right then and there.
Now you're confusing this equity part. That's not like, go ahead, Dan.
No, as I say, it's very confusing. I mean, for me too. I mean, I'm not a dumb guy, but this stuff, I keep asking Greg to explain to me how this isn't a Ponzi scam.
Okay, you got two people. I think we did this before with escrows. This will be fun to do it again here. Dan is flush with cash. Dan's got all the money.
Yes.
He's got so much UST, he's like sitting on a dragon's sword. He's not even sitting on a chair. He's sitting on a pile of UST. It's all over this whole house. Got lots of UST. Say he's got 50,000 UST and he wants to put it to work. So he goes to Anchor and he says, that 20%, that looks tasty, juicy even, you know, to eat that steak. 20%, man. If you put your $50,000 into this protocol and you wait 1 year, instead of having $50,000, you're going to have $60,000, a $10,000 return on $50,000. I mean, man, if you just had a little bit more money, you could almost live off that.
Yeah.
Okay. So Dan's got this money. He puts it in there. He's going to earn his $10,000. Now, what's the payout rate? Daily, monthly, whatever, per year? I don't know exactly what it is. Who cares?
Yeah, it is.
It's not relevant.
Yeah.
So now Anchor's got his $50,000 and they've given Dan something in return. They've given him a UST. They minted a token and they gave him that in return. That's sort of the thing that tracks. That's his receipt token. You can actually do something with that AUST. And that is beyond the scope of this conversation, but we will talk about that later. I will show you a little preview at the end, what you can do with your AUST, because you can do something really, really stupid with your AUST. So now Anchor has the UST. Well, what are they going to do with it? They certainly don't want it sitting there. They can't pay Dan 20% if their UST is sitting there doing nothing. So they've got to get that UST out in the hands of people who are going to pay interest on it. So Lewis has ETH. He's got so much ETH, he has no idea what to do with it. Man, he is sitting on a pile of ETH. He bought ETH back when it was an illegal security, but wasn't registered as one. It was pre-sold as an ICO. And man, he's got so much ETH. He's like, I am the ETH king. Okay. So he wants some UST because UST is useful and ETH is like a speculative asset on a shit chain. And so, you know, like, let's get that real stuff and get that UST.
I can't do anything that in real life with it.
You could sell it, but then you'd have tax implications, all kinds of other stuff. So you want the UST instead. So here's what you do. You come to Anchor and you say, hey, I got this ETH and I want to use it as collateral for a loan for UST. And they say, cool, you put up 2 ETH and we'll give you the equivalent in UST. So let's say ETH is trading at 2,500. So you put up 2 ETH, which is $5,000. So that will get you a loan of $2,500. Okay. So now Anchor has $5,000 worth of ETH. If you rinse and repeat this operation a few times, you can see that eventually Anchor is going to be sitting on quite the dragon's hoard of other crypto, right? I mean, think about it. Like, I'm doubling every time I do one of these transactions. So now I have pretty much 2x the leverage on ETH. Well, what could you do with that ETH? Well, anything you want, really. I mean, they have it now, so they could do something with it. And I'm simplifying this a little bit, but like, they do kind of have control over it. Now, if you saw in the video, they're working with this Lido Finance and whatever. And oftentimes what they'll end up doing with this crypto is they'll do something kind of interesting and they'll borrow that ETH to somebody else who wants to short ETH. They think ETH is going to go down.
So once again, it's the same thing as banking. Once they have your money, they're taking your money and going and doing whatever they want.
They're putting it to work for sure.
Putting it to work.
So some of what Anchor is doing is they're taking that ETH and they're bonding that ETH. They're putting it into like whatever something where if you stake your ETH, you actually collect something. So they're doing that and they're collecting that return. So if you watch the video, so we'll post a link to it. It talks about all the different kinds of little tricks that Anchor's doing to sort of manufacture this yield. So this is what's called a protocol. So let's go back to Terra and we'll kind of wrap with this idea of what protocols are on Terra and why Terra is kind of interesting. And maybe your coins have even shown up and then we can do that Terra swap thing. We'll see. Maybe just do a click on the wallet and just do a quick refresh. Maybe we've gotten those tokens now. Refresh this page. And we're on testnet. Haha, look at that. We've got some. So we can swap now. Let's just do this. This will be fun. So click that swap button. If you hadn't navigated away from this page, we'd been set up and ready to do this, but we'll go through it again. Click the UST dropdown, Luna, select a coin, UST. Don't swap all of your Luna. How about 5?
5 of my fake Luna.
Well, yeah, but
Testnet Luna, yeah.
okay, so scroll down a little bit. Look at all this garbage, a bunch of information. Like, who cares? This is all some stupidness, right? Essentially what it's telling you is you're about to get 492 UST for doing this swap. There's a bunch of fees, there's a spread, there's all kinds of stuff. This is all very esoteric and kind of interesting. You're on market, which means that you're not controlling these. If you click Terra Swap, you can control a bunch of this stuff. And then that's kind of like doing a stock trade in a sense. You click Terra Swap in the top there, right next to market, a little bit higher. Nope, not there.
Right there.
Yep. This allows you to sort of control some stuff. It's got this slippage tolerance and some other things. This is more advanced.
Like a market order.
Yeah, it's like a market order versus a limit order. We're not going to do that. Just click market, hit submit, and we'll have what we want. Now it's going to prompt you for your wallet stuff because you're actually spending money now. So you need that password. For somebody who's kind of savvy, right? See what it says? It's like you're executing this particular contract. So don't click post just yet. Click the little chevron drop down. So it tells you some stuff about what's happening. So this is kind of interesting because this is the guts of how this works. You're actually executing a smart contract. You're doing a limit order. You're saying, I want UUSD, which is the actual ticker for UST, saying this is what I want to receive. I won't take anything less than this. And this is what I'm offering. I'm offering this amount of U Luna. Okay. So if you hit post, that contract will actually get executed. And if we were going to do this more technically, we could go look at the transactions and all this stuff. You can just hit confirm. That's fine. We're not going to actually look at the transactions. You go back to your wallet. You'll see that very shortly. You'll actually have that UST. Click wallet. Might even have it already. You do. Look, UST. Bam. I mean, that's so fast. Terra is a very hot chain. It runs super quick. And things that happen on Terra happen very, very fast. You already have this UST and you could do something with it. We could go deposit it into Anchor. So let's go to Anchor, see what we can do. Or actually, go back to Terra Station. It's built in. It's the easiest place. We'll just do it there. Okay, so see that little earn button? Click that. Oh man, let's do it. Put in 400 bucks. Hit submit.
So Anchor is running a test net as well for people to learn on this stuff.
Yeah, not all contracts do, but click that little chevron. Okay, so scroll down again. We're executing a smart contract. The details of make it bigger. Yep. So you can see we're doing deposit stable, right? We're depositing UUSD 400. Put your password in one more time. And this is literally no harder to do this on mainnet. This really works. This is real. You really will earn this yield on Terra. This is not financial advice, but like this is not just testnet. This is no fooling mainnet. Like people are doing this.
And these are coins that are on like US based coin exchanges too. We're not talking about some crazy coin that you can only get from.
No, you can totally get Luna and UST on Kraken, like available on centralized exchanges in the US. So now you can see that we have some USD left over, right? And if we go back to our wallet, let's click on that. Something kind of interesting happened. Our money just disappeared, and like, what is going on here? There's nothing. Like, where did my money go? It's gone. No, it's not. Click on tokens. So this is kind of like Chia. It's got tokens. Click the add tokens. And what we want to find is AUST. So type in A. Yeah, that's the one. Hit plus. I don't know if you didn't click it or what, but that was the one we wanted. Okay, it did it. So click off of this. And look at
there it is.
That. AUST. That is what we got. That is our receipt from Anchor.
So we just did the same thing as we were doing in the Chia wallet when we made our wallet recognize a certain type of token. Even though the token was already in the wallet, we hadn't told the wallet that we want to recognize it for our own viewing.
It doesn't by default show you AUST because you may not be working with AUST, but since we're working with Anchor, all we need to know, and there it is. There's our receipt. So our receipt is 325. Interesting thing about Anchor receipt token is it actually can be used for something, and you can do something very, very dangerous and ridiculous. Let's go click on mirror now. It's this tab right there. Yeah. Maybe just close that. This one. So now we have this thing, which is an illegal derivative on Terra. And Sun Yu Lu or Do Kwon, or what, I don't remember what his name is. The guy who created Terra, the billionaire South Korean money magnate, who's been financing Terra, created this protocol called Mirror. And what does it do? Oh, look at this. It allows you to trade Amazon and Alibaba and Apple. What is this? This is like some kind of stock market. What is
this? Like wrapped Amazon or wrapped?
Are these
Alibaba?
mirror tokens of Baba?
This is mirrored assets. So these aren't the actual asset. It's essentially a synthetic derivative of these stocks. And I'm pretty sure all it tracks is the price of the stocks. I can't say that I fully understand this just yet, but there's something interesting going on with Mirror. And what you can do with your AUST is you can do stuff like buy these synthetic stocks.
So how do they, wait, hold on. Well, okay, so let's say I buy one of these synthetic stocks and it goes up and then I decide to cash out and they owe me money. I mean, where are they getting this? Are they just, this definitely feels
Then they
shady.
give you back
Pretty sus.
the other token,
Super
which would be
sus.
called.
Yeah. They give you back the AUST. Let's go back to Mirror. Don't click off of it. So let's stay on that for a second.
Wait,
click on.
Is it illegal?
No, probably not.
Oh, okay. Okay.
I mean, is it illegal for you as a consumer to participate in this? I don't know. Maybe.
Oh,
maybe
it
not.
might be illegal for me to choose to be rooked into this this thing because it's
I'm
hosted on servers in another country.
I'm not saying it's a scam. We're just showing DeFi. Like,
When
okay,
you're a
this
victim,
exists.
you also might be committing a crime.
I don't know. I'm not a lawyer. I'm not a lawyer. Click
Yeah,
on-
the shame will keep you from reporting it.
Click on Amazon. Click on Amazon. Okay. Connect wallet. Terra Station extension.
Warning, this might be illegal in your
Oh
jurisdiction.
gosh, these sites are so weird. Like, go back to Mirror. Wallet.
Refresh it. You're gonna have to
right
refresh
here.
it for
Yeah.
your wallet.
Refresh this page. We had it pulled up ahead of time.
Yep. Didn't know about the extension that you have.
Okay, click the Connect wallet one more time. Terra Station wallet. That looks better. Now you got the little space station or whatever. Tried to make it flow easy and sort of made it harder. Okay, cool. Instead of paying in UST, let's pay in something else.
Magic beans?
So click that maybe. That's not it.
How about click the UST itself? Does that change into another thing?
No, I think they only wanted you to do it in UST. There wasn't any
Okay.
Chevron
No,
or anything.
click the little down arrow maybe. Try borrow on the left.
Oh, let's borrow. I mean, let's
And
borrow
Amazon.
some of this stuff.
Yeah, go to Amazon. I mean, I'm not really trying to click the drop down on the UST. AUST. There we go. Okay, look at that. We just deposited our UST. Now we're going to turn around. We're going to do something with our AUST on another protocol. I'm not trying to say anybody should do any of this stuff, right? What I'm trying to show you is that the world of DeFi is exploding. And Terra, all we're doing is exploring two protocols, right? One that's built into the wallet, which is Anchor. It's there in front of your face and like there's yield, okay? That token that you get back, there's other stuff you can do. I'm saying there are things going on in DeFi that are wild. They are, like this is the Wild West of what's happening here, and people are doing interesting things. And there are lots of these protocols that are being created. The last thing I want to show is Mars protocol. Click on that guy. So here's another protocol. Maybe the next tab. This one's the marketing site. So this one is like more of protocol. People are borrowing.
Refresh this one too.
They're
Just like your
borrowing, they're staking, they're doing stuff. This one probably doesn't work with testnet, so don't worry about that. But people are depositing, they're borrowing money. Things are happening here. So these guys created some protocol, and I don't know a lot about it. I don't want to like really try to say anything other than what I did. Is that people are creating this kind of stuff? They're investing.
Well, and Anchor had billions of dollars in their deposits, and this one only has 18,000.
I don't know anything about this. I don't want to speculate on what this dashboard even means. The only reason we're bringing this up is to just show there's Anchor, there's Mirror, there's Mars, there's lots. This is huge. If you haven't heard of Terra, which I think a lot of us probably haven't, I mean, look at all this stuff. And it's very complex and it's very sophisticated, right? It allows you to do all kinds of very interesting things. And so there's our intro to the world of DeFi. What does DeFi mean? Now you know.
That was the Third Coin Podcast, where we talk about the past, present, and future of blockchain, cryptocurrency, and Web3 technology. If you learned something new today, we'd love to hear about it in the comments. If you'd like a different question answered, go ahead and ask us in our social media, which can be found anywhere at The Third Coin. Please like and follow us for some of the latest information on YouTube and podcasts everywhere.